Welcome to episode 693, LeonBlack, 10 Lessons. This is an outline of episode 693, lesson 1 to lesson 5. This is an outline of episode 693, lesson 6 to lesson 10. Lesson 1, 10-year cycle, plant seed and sell.
Private equity is a long-term illiquid asset class. There's a reason why LPs are asked to lock up their money for 10 years. Basically, it involves a cycle. You plant seeds, you try to build value when you own a company, and then you look to maximize your exit.
Lesson 2, stellar return for 29 years.
Low 20s return. Over the last 29 years, we've been fortunate in being able to generate a 39% gross, 26% net. Now, we don't do that every single fund. That's an average over 29 years. Our worst is.
Lesson 3, his DNA. He's a value investor.
Well, I think we may be a little bit an outlier in two respects. One, our whole DNA has been focused on value investing. So we, through those different pathways I described, we try to buy good companies at low multiples, and that is what we've done. Our last two funds were invested at about a 6 multiple of EBITDA when most of our peers were at 10 or 11 times.
Lesson 4, disaster number 1. In 1975, his rich dad, Eli Black, committed suicide by jumping off the Pan Am building. He was pursued by the U.S. government. The redeeming part, the same year, LeonBlack earned his MBA from Harvard University. Lesson 5, disaster number 2, the collapse of Drexel Burnham Lambert in 1990. He was 38 years old and unemployed.
I spent 13 years at Drexel Burnham Lambert. Say 12 years there were spectacular, rocket ship going all over the universe, and then the last year was a disaster as the rocket crashed and burned.
In 1990, he bounced back by co-founding Apollo Capital with 2 other ex-Drexel employees. Lesson 6, French luck. 1990 to 1993.
From day one, we were different. We were very fortunate to have gotten a cold call from a large French bank, the Credit Lyonnais Bank, who asked whether we could do something to help them build up an M&A advisory business. At that point, at Drexel, I had been the head of M&A.
Lesson 7. He's a tough negotiator.
As well as investment banking. It was a strange request, timing-wise, because we were the world, including the U.S., was in the middle of a pretty deep recession.
And somehow we found ourselves in Paris at the offices of Credit Lyonnais, and they had offered us our first $400 million, except there were strings attached to it. I, of course, was ready to accept. Leon at that point simply turned them down and said, we can get a better deal. And he was right. We got a better deal, $800 million with no strings attached.
Lesson 8, Ruthless, LeonBlack.
When other people are losing money. So how does he pull that off?
To various legal fights, including one with Carl Icahn, right?
That's right, exactly. Well, Carl was not having it.
Because that's Realogy that we're talking about, right?
Exactly. He bought a bunch of Realogy bonds, and basically what the debt exchange, what he was arguing, the debt exchange would actually put the new debt ahead of his, and he was just not happy with that situation, as most smart debt investors wouldn't be.
Right,
so he took him to court.
Icahn would have figured out right away. So what is next then for?
Well, his picture of LeonBlack and Paul Singer. Paul Singer is the king of vulture fun. He's not a saint either. Lesson 9. Long-term relationship with investor is the cornerstone of his success. The last we checked, he has $323 billion of asset under management. Lesson 10. The 3 pillars of Apollo since 2011 IPO: yield, growth, and value.
The fact of the matter is we like to say that we have built a unique platform which encompasses value, encompasses growth, and encompasses yield. And the market doesn't get it.
Thank you for watching. Please subscribe and leave your questions and comments below. Wishing everyone peace and prosperity.